So I'm trading for more than 3 years right now, and when it comes to trading, one of the most important things, or actually not one of the most, but the most important thing is gonna be market structure, because market is either gonna move to the upside, higher highs, higher lows, higher highs, it's gonna be bullish, or it's gonna trade to the downside and it's gonna be bearish. Either way, it's gonna move to the upside or downside. It's never gonna stay steady. But I see there is a lot of misconception going here on YouTube and misguidance, because there is a lot of fake demo gurus who are not making any money from the markets. They don't know how the market moves and they are teaching you how to trade when they don't even know how to trade. So that's why I decided to make this video, to teach you from A to Z everything that you need to know about market structure, so you can finally start to make some profits with it, because to be honest, it's one of the easiest concepts, but it's actually also one of the most important ones. So let's get into it. So when it comes to this picture over here, it's very obvious that market is breaking structure to the upside. At least you are gonna see that way, and you are gonna see higher highs, higher lows, higher highs, and maybe you're gonna enter the market on demand zones, fair value gaps. I don't know what you are trading, some sort of support resistance, but anyway, you're gonna see this as a bullish price action and you're gonna place your trade somewhere here, but in the end you're gonna get stopped out. So it doesn't matter even if you place your stop loss here, your stop loss here, or your stop loss here. So either way you're gonna get stopped out. And the same goes, this is bullish example, but the same goes with bearish. You can see break of structure here, break of structure here, and then you're gonna place your trade here, thinking like, oh, this is my protected high, market shouldn't go to the upside, and boom, you're gonna get stopped out. Why is this happening? Is because of liquidity. So in today's video, I'm gonna teach you everything that you need to know about how to spot fake market structure and avoid stupid losses, how to determine real structure and be on the winning side of the market every single time. And also I will teach you my strategy that made me profitable after like 2 or 3 years, so you can easily filter only the best setups, and I have around like 80 to 90% win rate, sometimes even more when market conditions are good. But of course I'm gonna lose, you're gonna lose, we are all humans, and there is not a single strategy that has 100% win rate, so that's completely normal. And also guys, by the end of this video you will get access to my completely free community of real traders, where I also share my analysis and trade recaps, so you are never gonna be behind the markets. But just quick pause before we continue with everything, I just want to show you something. This is TradeZella, my verified checker. You can see that I check every single month over here. You can see losing trades, break-even days, winning days, and I made more than 6 figures in total profits using this strategy. So you know that I'm actually doing all of this and I'm not faking all the stuff like all those demo gurus trying to sell you something. So guys, before we jump into the real charts, there is actually one thing that I need to show before we go on the real examples, live examples, and that's gonna be candlestick closure. I know it's very familiar to all of you, but I just need to go quickly through this. So this is gonna be bullish candlestick, and this is gonna be bearish candlestick, of course. So when we have bullish candlestick, open is gonna be here on the low and close is gonna be high over here. When it comes to bearish candlestick, open is gonna be to the upside and close is gonna be to the downside. And the reason why I'm telling you this, because this is gonna be the crucial thing to understand the market structure. You're gonna see everything like in just a minute, but just bear with me until the end. So let's say this is gonna be 1 hour candle over here, and it's gonna present 1 hour of price action, and inside of that 1 hour candlestick you're gonna have like 60 1-minute candlestick, which means market can easily manipulate the price in the last 10 minutes before the closure, 5 minutes, or maybe even 1 minute, and that closure or manipulation is actually gonna be the real sign of market reversals or market's continuations. So let's get into the first example. So you can see over here that market is trading to the downside, which means we are creating some sort of lower lows, lower highs, breaking structure to the downside, and again we are anticipating that market is gonna break the structure to the downside. But guys, if market was really that easy, which means if market was really moving like these, higher highs, higher lows, higher highs, higher lows, higher highs, everybody would place a trade here, target the highs, place a trade here, target the highs. Do you agree with me guys? Because market will be so easy. But the real thing market is not gonna operate like that, which means we need to dive a little bit deeper and we need to understand the concept of liquidity. So every single time when market moves to the upside, it's generating liquidity. So we are creating some sort of structure, higher highs, higher lows, higher highs, higher lows. And let's say one more time, higher high. And guys, the same goes with bearish example. But the thing is, stop losses are resting here and stop losses are resting here, because 99% of traders are actually placing a trade very early. And what the market is actually gonna do, market is gonna come here, stop out everyone who is in the early buys, stop out everyone, and then it's gonna move to the upside. And let me show you that here, guys. So market is trading to the downside, and then market stopped out everyone and made a move to the upside. So I'm gonna teach you how to catch moves here after the liquidation, so we are always on the right side of the market, because we know this market structure is not working like this: lower low, lower highs, lower lows, lower highs, lower lows. That's just not how the market moves. But at the end, once you understand this, you're gonna be ahead of 99% of traders, so you don't need to worry about anything. Okay, so let's get into the first example. Over here you can see that market is breaking structure to the downside. At least that's how the 99% of traders are gonna say this. But the thing is, they don't understand the liquidity, which means this was significant low in the market and market came here, swept that liquidity, and then gave us a move to the upside, which means we are gonna see that probably again. And if I play the price, you can see every single, oh my god, mosquito is flying here, bro, I can't believe. But yeah, guys, anyway, so let's say if you were bearish, you place your trade here on the bearish fair value gap like this, and you are trying to catch a move to the downside. It doesn't matter if you are trying to trade supply demand, fair value gaps or stuff like that. If you place your stop loss, you can see that you got stopped out, because that's just not how the market moves. And every single low in the high in the market, let's say this is high, this is low, is gonna get swept, because that's how the market actually moves. It's liquidity. It's very simple. So I'm gonna play the price over here and I'm gonna show how are we gonna take advantage. Let's say right now over here, everybody's thinking, oh my god, we are bearish, market is breaking structure to the downside. But the thing is, no, we are not bearish. Market is just coming to sweep this low, because this is the final low in the market. And when it gets swept, let's say here, we are gonna scale to the lower time frame. So let's say 1 hour. On the 1 hour, we can see the same thing repeating over and over again. So I'm gonna just replay the price over here and let's say scale to the 1 minute, because that's where we are gonna actually take a trade. So you can see in the moment over here, it's about 8 o'clock. So we are gonna skip the price until 9:30, because at 9:30 New York session is opening. So we are always gonna trade from 9 a.m. or 9:30. You can see until then market is just gonna pretty much consolidate. You can see it's not breaking structure to the upside, it's not making any fair value gaps, and you can see that market conditions are very bad. So I'm gonna just play the price, and boom, here we go, guys. So here's where the most important part comes. So guys, we have the sweep of liquidity on the hard time frame, right? So this is the sweep that I marked, and right now market is consolidating, and after the consolidation, market is gonna one more time manipulate all the people. They're gonna see this, oh my god, we have break of structure to the downside, let me place my trade here on the fair value gap. And they are hoping that this fair value gap is gonna hold the price, trying to target some sort of lows. And if we play the price, this was pure manipulation. They are gonna get tapped into this fair value gap, and then boom, instantaneous move to the upside, and they're gonna get stopped out. So what are we gonna do different, guys, if we know that this is a main sweep of liquidity on the hard time frame, and then one more manipulation on the lower time frame, and market is literally trying to manipulate every single trader in the whole entire planet? We are gonna use this fair value gap as our entry model. So whenever bearish fair value gap gets inverse, we are gonna enter the market in a long position, and vice versa. When every single bullish fair value gap gets inversed, we are gonna enter the bearish position. So over here we have beautiful manipulation and inversion with good momentum. And guys, keep in mind, this is why I told you that candlestick closure is the most important thing, because this is how this 1 hour candle was looking like. Do you see, we don't have any displacement here, we just wicked around 1 2 and 3 times. So wick around here 3 times and then move to the upside. So just keep that in mind. You always need to wait, my god, you always need to wait for the candlestick closure. So let's say now I'm gonna enter the price. Stop loss always underneath that inversion or the last candle, something like this. And let's say we are gonna target, we can maybe even target, oh my god, we are gonna mark this fair value gap because this is unmitigated 4-hour gap that needs to get retested. So we can easily target that, but I'm never gonna target like 6 to reward. I'm more than satisfied with like 1 to 2, 1 to 1, something like this, but you can easily leave a runner to these highs. But let's say for this example we are gonna target 1 to 2 because that's very easy to achieve. So if we play the price, you can see how it get hit in like few minutes, and then we are gonna leave a runner to this high. If we play the price, let's see if this is gonna get hit. And also guys, you can see one more time this bearish value gap got inversed. We are following the trend. You can enter the market here, stop loss underneath, targeting the highs. If we play the price, you can see, and boom, it got hit. That's how the market actually moves. And also guys, I know there's gonna be some of you watching this who are probably working 9 to 5. Trading is not your full-time income, but don't worry, you don't need to be scalping on the 1 minute because market moves actually the same way on 1 hour, 4-hour daily or 1 minute time frame. It's always the same thing. So we can, let's say, go on the 1 hour over here, and it's pretty much the same concept guys. So after the liquidity see, we are not gonna scale on the lower time frame, but we are gonna stay on the 1 hour and we are gonna mark the first fair value gap over here. And once that fair value gap gets inverse, we are gonna enter the trade. You can see it's pretty much this, it's literally the same thing that we did on the 1 minute. Stop loss underneath or something like this, and you can target again this 4-hour unmitigated gap. So we can reduce our stop loss, so we can make it at least 1 to 1, and if we play the price, boom, here you go. It's simple as that guys. I'm repeating, and one more time, let's say what is market doing right now. So you can see market came here, so this is like literally the perfect example over here guys. So we have this 4-hour and market was trading here. At one moment market even closed this gap at one moment, and then before the closure market came here and didn't inverse, which means market manipulated all the bars. And guys, trust me, you always need to wait for the candlestick closure, because if you entered here, let's say here, stop loss underneath, you probably got stopped out, as you can see with this candle over here. So guys, keep that in mind and always wait for the candlestick closure, because that's actually gonna tell you the whole story behind everything. So guys, that's gonna be it for this video. I hope that I helped you, because it's very simple to understand how the market actually moves. But maybe if you didn't understand, you have a bunch of free content on my channel, so you can just check that out and learn how to trade money with trading. So that's gonna be it for this video, and I'm gonna see you in another one. Peace.